episode, I'll be talking about Bank Nifty and some stocks that you guys can probably watch out. I'm not keeping Nifty on my radar because I don't see any setup forming up in Nifty. So let's start the video and you guys can probably watch out these stocks and keep it on your radar and make sure that you're consulting your financial advisor before taking or initiating trades in these stocks and or I basically what I'm going to be talking about the index. So yeah, we have the one-day chart right in front of us of Bank Nifty, and what you guys can clearly see, or what I basically see, is my overall bias is going to be a little different as to what you guys have. So please do not change your bias and respect your technicals. We might get proved at a lot of you might see a lot of times me, you, or anyone else getting proved out wrong, and market is nothing but a game of probability, and this business is all about probabilities. Even if you are getting proved out wrong, it's nothing, that's not a problem at all. This is going to be a game of probability, and all you need to learn and make sure is when you are learning, you are just not repeating the same mistake again and again. Coming back to the charts, when you look at the current price action, Friday was a good closing for Bank Nifty. Okay, prices kept on retracing, and this was the buy side liquidity. If you look at this zone, if I stretch this out, this was the buy side liquidity where firstly a lot of people got trapped. Market came down again. A lot of breakout long traders got trapped. Post that, we again saw this getting taken out. A lot of traders got trapped and we came down again. So buy side liquidity got taken out and that pushed the prices to go further. But if you look at something, even after the buy side liquidity getting taken out, we kept on consolidating for a week, and post that we saw a good expansion towards the downside. So make sure when I talk about these swings or these setups, they usually take time, because I'm not talking about 15 minutes, or I'm not even looking on something at a 5-minute time frame or at a 15-minute time frame. So understand that these setups might take a little time to form, and then only you'll see the reaction. Now coming back to what I basically see, a bearish order block at this zone, and at the same time an inefficiency which needs to be filled. Prices are going to come here, take out some orders, and then we'll start moving down again. That is what I assume, and I have a bearish directional bias, and my overall bias is also going to be bearish on a high time frame or on a larger time frame perspective. So this is going to be the first part that I am assuming and anticipating might follow. So prices might start to chop a little and move up to this zone of 52,400 to 52,600, and then after taking out this zone, we might start retracing towards the downside, take another small upside, and post that we might have a huge expansionary move towards the downside, which might fill the fair value gap price has created. If you look over here, which has a huge gap too, and we might retrace here maybe to this first zone of this first level of 49,500. That happens to be the first zone that I am personally going to be looking at. The second path that I have drawn from a probability perspective is a bullish path, where we start to chop, let's say a choppy price action or a sideways price action, and post that we start moving up, take out this inefficiency, start to retrace a little, and then we saw another expansionary move towards the recent all-time high. I am not talking about piercing the recent all-time high. Yes, prices might go a little up, but yeah, stay cautious. If you ride this whole trend towards the upside, make sure to lock in your gains. So this is all about the analysis of Bank Nifty. You guys can probably watch out that, and just make sure that before initiating trades, you guys are consulting your financial advisor. This is it for Bank Nifty. Now coming back to the stocks to watch, you guys can probably, the first stock that I have on my radar that you guys can probably watch out is going to be Aarti Drugs. Now on a 4-hour time frame, if I show you guys the current price action of Aarti Drugs, you guys can clearly see that price is reacting from a sell side liquidity where a lot of people got trapped, and post that the move that was shown was quite impulsive. We came back again to the same zone to tap out the liquidity and to fill the gap that was currently being, or previously made here. Again came back to the same zone and reacted from the same zone. Now prices are now going to go down again. We have started to consolidate. Since this is a 4-hour time frame, when you filter out the chart on a 1-hour time frame, the setup is going to be completely different and the consolidation is going to be big. Now when it comes to this price action, what I basically see is the base looks completely matured. We've taken out a lot, or we've probably done a lot of liquidity grabs to take out orders. If you see the wicks, big wick here as well. This was a small wick, so 3-4 big wicks done, a lot of orders being tapped. And it's just not from an order perspective or liquidity being tapped. You look at an overall structure too, and the structure looks completely fine. I am aiming for this high, or let's say this small wick to be taken out. And let's say even if I am looking at this high or this wick, this big wick to be taken out, the reward is going to be 8.45% and the risk is going to be 3.5%. It's almost from a risk to reward perspective, a 1 is to 2.5, risk to reward. And it's fine even if you can book somewhere around 1 is to 1.5 or 1 is to 2, it's going to be fine because a winner is a winner lastly. Okay. But the only thing that you guys need to make sure is be conservative when you're from your entry perspective. The entry that I'll be personally looking for if it gets tapped is going to be 522 to 520. If you like breaking down your entries in parts, then yeah, you are good to go for that. And yeah, just consult your financial advisor before doing that. Alchem Labs. Now this is going to be a pharmaceutical stock, and pharmaceutical index printed at an all-time high last week on Friday. From an investment or from a swing long perspective, just try to understand that chasing momentum is going to be very fine, but you also need to understand and prioritize that a lot of people do not talk about, and that's going to be the point of origin. I scouted this trade in the month of October 2023 last year. It's been somewhere around 9 to 10 months, and you guys can clearly see the price action from here and the amount of returns it has printed, somewhere around 50%. So be more cautious and see, you don't have to be a pig in, by pig what I basically mean is looking out for bottoms and looking out for tops. You don't have to do that. Overall, you just need to start to understand that the point of origin is a place where you guys can probably think about longing stocks in a dull market or in a consolidating market, because that is always going to give you a better return when compared to you looking for momentum more. Because when I talk about me longing stocks over here or me longing Alchem Labs especially over here, maybe the upside might just be somewhere around 10%. We might take out this high, take out some buy side liquidity. A lot of people are going to start longing here, and then we start to fall. What is going to be the amount of returns that we are going to fetch when compared to the same setup over here? Try to understand the difference. Yes, coming back to the investment perspective, we are currently consolidating near the all-time highs. That happens to be a very good catalyst. And at the same time, we have the earnings coming on 9th August, which is completely fine. You guys have somewhere around 1.5 weeks. You can probably ride the move towards the upside, and maybe the post the earnings you might see this consolidating or retracing down or towards the downside. So from an entry perspective, yes, the zone that you guys can probably watch out for is going to be 5,200 to 5,250. Overall risk is going to be 3% and the reward is going to be 10%. Or let's say even if the reward is not 10%, from a conservative perspective, you can simply start to scale out when you see you getting rewarded by 6 to 7%. So probably this zone of 5,590 or 83. Okay. The third stock is going to be CCA. Now, why am I looking for CCA? It's nothing but an AMD's, setup. You saw this whole manipulation over here started getting accumulated. We saw some manipulations, some small manipulations over here. Price started to get distributed. We started to accumulate here again, small followed by small manipulations. Now, this base is currently looking matured, and at the same time, we've been consolidating for quite a while. This is again going to be a small manipulation setup that you guys can probably play out and look for longs. Base looks completely fine. Base looks matured. We've been consolidating for quite a while, took out a lot of liquidity, and now we might start to, pierce towards the recent swing high that it made, that was around this zone of, let's say, around 687, and post that we started dropping over here. So you guys can probably risk somewhere around 2% and look for a reward of 7 to 6%, or 1:3 counter ratio that you guys can probably look out for. GSPL, I have a personal entry in this. Kindly consult your financial advisor before investing in this. And from an investment perspective, GSPL completely looks fine. And the major reason behind that is this huge void. This huge void is not or never going to get filled instantly. But after seeing the base being built, this consolidation and post that, this retracement was the strongest catalyst for me to look out for longs. I still waited for this another retracements towards the downside, and this is where I plotted my long and I started to churn out or basically infuse my entry over here and started to add up more quantity. As of now, I think I anticipate that we might retrace again towards the downside of somewhere around 324 to 325, and post that we might see a huge expansion. My overall target is going to be a minimum target of 361. You guys can probably keep this on your radar again. Jagran Prakashan, a very solid base with an excess price or a sell side liquidity being taken now. What else do you expect? You have a fair value gap, a small fair value gap over here. If you can probably, let me just point this fair value gap out. You have a fair value gap over here, and you can probably look out for entries from this zone of 98 to 99. We are overall in a bullish trend, and a bullish trend fair value gap can result in more expansionary moves, and this is the setup that I'm going to be looking at in Jagran Prakashan. If you are interested in accumulating or looking for longs in this, again consult your advisor before initiating any trades in this. Jindal Worldwide looks completely fine to me. It's trading near, you can say near its all-time high only, which happened to be 482, and it's currently trading at 382, 100 rupees away, or let's say somewhere around 25% away from its all-time high. It has the same structure where it was getting distributed. We saw a huge manipulation, and now this is called the real accumulation that you guys are clearly seeing. See, no, not equal highs too, but we kept on making small higher highs. This was somewhere or the other an equal high to, and another all-time, not an all-time high, but a higher high or a recent high. From a 1 hour perspective, when you look at the price action, I do see a huge breakout coming over here. From a long perspective, you can probably look out for 365 to 375, and yes, you can easily aim for a 10 to 20% gain in this. Consult your advisor and then only take an entry. Network 18. See, network 18 is not going to be something that I'll be taking an entry in, but I'll be just keeping it on my radar because the structure looks good. Once I see the fair value gap being filled, which is going to be here, another inefficiency is here from the point of origin that it threw the prices up for. I'll be looking for these zones to be taken out or a consolidation at these zones, and post that only I'll look for longs, and I'll be sharing that. The last one is going to be Paytm now. Paytm has literally given a move of a blockbuster, nothing else. You see huge expansionary moves in Paytm, and this was honestly a blockbuster move. I did ride the move of Paytm from 455 last time to somewhere around 480 or 478. That was shared in my Telegram too. My Telegram is completely free. You guys can probably join it only if you guys want to, because I update about crypto world markets and at the same time stocks to watch every day, forex and commodities too. So I try to cover everything, and I usually trade crypto market and Indian stocks or Indian equity market a lot. So you guys might, help yourselves by joining that group. When I talk about Paytm, Paytm has again the same setup that GSPL had, a same setup, a same base being built, lows being made, liquidity grab done. We have huge voids to be taken out. You guys can probably look for swings for somewhere around 480 to 490. So that's it for today's update. Watch out these stocks and keep this on your radar before infusing any or a single penny in all of these stocks. Consult your advisor and do your own research at the same time as well, instead of following anyone randomly on social media. I'll see you guys in the next video. Till then, trade safe and manage risk properly.